Yeah, good afternoon. It's Jim from jagfx.com. It is Friday, the 20th of July 2018. This video is one I promised early today. I'm just going to go over the mod MACD method, show you the setups and also how to trade it. I'll give you some examples on how to trade it. Now, this system I actually purchased from a guy. I'll show you a bit of a backstory to this. I just got to remember where my picture is. Here it is. No, that's not it. Well, I'll start on this first. The mod MACD system, for those that don't know, is the free bonus system that comes with the my first book, the Forex Trading, the basics explained in simple terms. You can see the free bonus trading system. That's the mod MACD system. It's just a purely mechanical system to get people that are just starting out in Forex, give them somewhere to start and go from there. Now I'll go to my website here. Now the system I bought was from a chap called Beau Diamond. Beau Diamond. And you can see here, if you Google Beau Diamond, he was sentenced to 15.5 years in prison in the States. I think there's a Ponzi scheme. Yeah, there we go, down the bottom here. Alleged Forex Ponzi scheme by Beau Diamond. I think his dad was pretty famous too. His dad was a salesperson also. But you can Google that if you want. That's the name of the chap, Beau Diamond. So I made a couple of notes here so it's easy for you to read. So it's a mod MACD. It's a mod just means modified MACD. Originally by Beau Diamond. I'm not even sure what the original system was called, Easy Trader or something like that. It cost me nearly $1,000 back in the early 2000s. But that's alright, money well spent at the time. It was originally designed to trade on the 2-hour charts. You can Google him, like I said, not sure if he's out of prison yet, so that's Beau Diamond, that's his name there. Now, let's have a look at the original setup. I'll see if I've got it here. Where is it? 2-hour. Here's a 2-hour chart. This is just a Great British Pound USD 2-hour chart. Now, the thick blue moving average is the 240 SMA. You can see it there. LMA, sorry, linear weighted. I use this in all my trading. The 240, you'll see it all the time in my trades. Every chart I use, 240 LWMA. So I just call it LMA, linear moving average. I don't worry about the weighted, but it's a linear weighted moving average. That's on all of my charts. The other moving average, the brown one, is a 25 simple moving average. It's not something I use a lot, but it's in this method and it's one of the criteria. So, and I'm not sure what indicator he used. It was a can't recall. It was a different one that wasn't available on MT4. So we had to improvise, and that's why we come up with the MACD Platinum, and with the settings of 6, 12 and 1. So 6, 12 and 1, and that you can look at the colours. You can see all I've got is the signal line highlighted. The main line has got no colour, 0, none. See none? None. That's all you do. Click on there. And that one's the dark blue, you can see it there. So, and the level, the only level I've got is a 0 level, and that's very important, that 0 level. So what his idea was on the 2-hour charts, and the pound was one of the pairs he strongly suggested, and it worked really well. But it was, you sort of had to be on the charts the whole time, because any time there was a signal, you took it mid-candle, which my method, well, I've modified it a little bit, is a little bit different. So we'll look at in here somewhere. So we'll look at to the right of this line here. We'll go and we'll just expand it a bit. All right. So his method was the MACD, the fast MACD as I call it, 6, 12, 1. Crosses up through that 0 level, and that's your main indicator. Now, as long as price was above the 25 SMA at any time during the candle, you would enter that trade. So that was his basic system, and you just basically run your trailing stop below the 25 SMA, and that was your exit. So it was very straightforward. You could set up this yourself. It's quite easy. You've got anyone that's basically watching this will have access to all of these indicators. They're all in default. That's the MACD and just the moving averages. So it's not hard. 25 SMA, 240 linear weighted moving average, and a fast MACD. So that's the original method. And look, it worked well, but we're talking about going back to the sort of the mid 2000s to the later 2000s. Like when I say later, I mean like 2007, 2008, 2009, sort of a bit earlier, where there was nice trends on the 2-hour charts. But these days they are a little bit choppier, a little bit messier. So something you've got to be aware of. Now, I modified it just to make it a little bit easier. And this is the template you'll see on all my screenshots, my videos, when I go through either my Facebook group or with my daily videos. This is the template you will see, or even the Telegram group. So the only difference, it's the same moving averages, the same fast MACD, so nothing changes there. QMP filter, which a lot of you have got access to. You can have a look, it's just the default settings, 12, 26, 9, 183. Colours, just lime, green and red, nothing else. I've got no high time frame or anything like that, so no big deal. So it's just a QMP filter, that's the only thing added to the price chart. And on the fast MACD, I've also added just the, see if I can bring it up. Just your standard MACD, the MACD histogram from the got a brain snap here, from the default on MT4. So it's just a standard 12, 26, 9, and the colours, all I've done is 0's none, 1 is orange red, 2 is none, just a dotted line, that's all it is. Look, I don't really use it that much, and it sort of moves with. My aim with this was to, where's an example? I'll see if I can find it. I'll just expand this chart. This is a daily gold chart if you're curious. Now here's a good example. If you look here, you can see the orange line coming down, and it crosses when the blue fast MACD crosses through that there. That's a good indication that it might be time to take some action on your trade, like maybe exit or take a partial close or something like that. I don't really use it that often, but it just looked like a good idea at the time. It does move a bit with when you move scroll the chart across. You can see it sometimes. See it moved up and down there. So it's not. You've got to take it at sort of face value. I prefer to use other methods, but that's what it's there for. And I do mention it in the book and the reasons for it. So that's that. There's two indicators. They're on top of each other there. As I said, you don't really need that one. And the bottom indicator is just a standard MACD. It's actually called a MACD complete. The problem is with MT4, it hasn't got a full loaded MACD platinum with looks like that with both lines and histogram, but you can find them anywhere. Just Google it. Even if you want it, just ask me. MACD complete, I can give it to you, and I'll show you somewhere else in a second where you can get it. So it all is a standard MACD. For some reason, MT4 been a bit, I don't know, stubborn or something. They haven't got that as default indicator. They've got other MACDs, but not this one. So I'll stay on this page here. So what we're looking at with this, the most critical part about this whole setup is the fast MACD. Now you'll see on mine, I've got red dots and green dots. All they are is confirming the cross. They might not necessarily be on the 0 level all the time, as you can see on this one here. Same with that green one there. It could be a little bit either side, depending on how fast the market moves. Normally on big candles, you might see a bit of a move. So these green and red dots are a custom indicator. The actual indicator that I'm using for the fast MACD is called the Hopper MACD. It's just a custom indicator made by, designed by Jennifer from Simply Combo Trading. So it's called the Hopper MACD from Jennifer at simplycombo.com. Now, it's a custom indicator that I had to purchase a part of one of her courses, so I can't share it with you guys. If you want to visit and buy it yourself, you feel free to. There's an alternate called the Pure Hopper. Now the Pure Hopper, she was offering for free. I can't seem to find it at the moment. Instead of putting dots on the chart, go back to the chart. Instead of putting the dots on the fast MACD, the Pure Hopper puts arrows on the price chart. So she was giving it away for free, so if you can track that down, it's called Pure Hopper, and all it does is put arrows to show you where the cross takes place. At the end of the day, if you don't have these dots, the simplest way to confirm the cross is just you bring up your this data window here, up the top left, that little looks like a sniper's scope. Click on that, bring up your crosshairs, and all you do is you can run your crosshairs across there, and you can see in the box here whether it's confirmed close or not, or confirmed cross. Now remember, I take all my trades on the close of a candle, and take the trade on the open of the new candle, or very close to it. That's the plan. If you decide to take trades mid-candle, like the original method, you may get caught with your pants down, whereas the price may move to a certain extent that the cross is no longer valid. Up to you though, whether you take it or not. Like that red dot this red dot here could be there 1 minute, then an hour later on the daily candle could be gone. If price turned up and that just bounced off the zero level and didn't cross. So I tend to wait for the cross, confirm cross, then I'll take my trades. Alright, so that's the fast MACD. That's the most critical. This has to be showing a cross to take a trade. Alright, so this is the main indicator, the crossing of the zero level. Now there's three other indicators. There's a QMP dots, which most of us are familiar with, the red and the green dots on the price chart. Red and green. There's the 25 SMA, and there's the standard MACD. Now, as long as if we've got a cross, say we'll use this nice buy signal here, the cross is confirmed on this big bullish candle off the 240 up through the 25 SMA. We've already got a green QMP dot, so that meets the criteria. Price is closed above the 25 SMA, so there's another criteria. And we look down at the standard MACD, hasn't quite gone into buy mode, it's very close. You could probably say the histogram, or the momentum, which is the histogram, you could say that's showing buy, but it hasn't quite gone there, but that's not really necessary. When we've got a cross, confirmed cross on the fast MACD, we need at least two of the other criteria to be met. So there's three other criteria. There's a QMP dot, a close above or below the 25 SMA, and the MACD, standard MACD, to be in the same buy or sell mode. When I say buy or sell, all it is a cross of these two lines. You can just see the dotted line there, and you can see it's uptrend there, downtrend there, uptrend there, up, then downtrend. So that's all that is. The histogram is just to give you an idea of momentum. You can, the bigger the histogram is, the stronger the trend is, and once it starts to weaken, go the opposite direction, it just shows the trend's running out of steam. That's just your standard MACD. So, for example, here, that's a good buy signal. You take the buy. Now, with stop placement, it's up to you. I generally, on the daily charts, don't enter a stop initially on these trades, but you can put a safety stop below the recent low if you want, or you can put it, in this case, you can put it below the 240 LMA. I wouldn't get too close on the 25 SMA until the trade's had some room to move. So here you can see the trade goes up nicely, up nicely, up nicely, up nicely. You can look at a few things. It's got to a previous high. If you look left there, time to take some action, maybe close out half. That's a common thing you would see in a lot of my videos. Or you could look at, say, losing momentum down here on the standard MACD, or you could just see it rolling over on the fast MACD, red dot on the QMP filter. There's many ways to manage trades. Like, there's no one easy way to do it, and it doesn't matter what you do, you won't get every pip out of every trend, so don't think you will. So yeah, as you know, I scale out trades, and what I'll do is I'll stay in this trade until once I scale out and get my stop in a possible overall no lose situation, then it's just a matter of waiting for a reverse signal. So here we've got the reverse signal. We've got a confirmed cross through the 0 level. The standard MACD is heading down. We've already had a red dot in the QMP, so we've got enough criteria already. And you can see that the price is close to closing below the 25 SMA, but not quite, but we don't need it because we've got 1, 2, 2 of the other criteria, as long as we've got this main cross. So we take the sell on the open of this next candle. Here we're trading against the trend. When I say trading against the trend, I mean we're trading towards the 240 LMA, and you can see it's like a magnet sometimes, this thing. Look how it bounces off that. So to me, I'd be starting to take some profit off the table when it gets to the 240 LMA. Move a stop somewhere, you know, above the 25 SMA. Give yourself a bit of breathing room. Get yourself in a overall break-even position. So that means if you took 100 pips on the first half of your trade, no need to put your stop at point of entry. You can put it 100 pips behind your point of entry. So that's an overall break even. So, and as you can see, the MACD, look, price headed back up towards the 25 SMA. The standard MACD kept down, and fast MACD went up a bit, but then came back down. So we go along here. Here we go. That's when you'd be, if you haven't exited the trade already, for whatever way you wish to manage a trade. Here's your cross, confirmed cross on the fast MACD. Look at the standard MACD, it's already in buy mode. There's a green QMP dot already, and when we get the signal, we've closed above the 25 SMA. So all criteria met. Take the buy. Look at this. Even though it pulls back here, you pull back, fractal there, put your stop below there or something. Up it goes, and then it eventually falls away. Gold's a very good pair to trade for this. So there's your sell. There's your red MACD. Red QMP filter dot. We've closed below the 25 SMA, and most importantly, we've got a confirmed cross of the fast MACD. The standard MACD is already in sell mode. Take the sell on the open a new candle, and look what happens. Look at that 240 right to it, to just about the pip, and we've got that sort of cross on the fast MACD and the other MACD overlaid here. Time to take some action. Goes up. Get a cross here. Cross on the fast MACD. The standard MACD's right at that point, looking a little bit ugly, but I guess you could technically say it's in buy mode. We've got a green QMP dot. We haven't got to close above the 25 SMA, but there's enough criteria just to take that buy trade. Take it there. Look what happens. Rolls over. And we've got a confirmed cross a few days later. I'd be exiting on that. As soon as you get a cross to the opposite side, take the exit. Take the exit. Simplest way to do it. If you took this trade, it's getting a bit close to the 240 LMA. If you took the trade, let's have a look what criteria is made. We've got a red dot. Price definitely closed below the 25 SMA, and the fast MACD is definitely crossed, so that's the main criteria. Standard MACD is looking a little bit ugly, but we've got enough criteria to take that sell trade down to the 240. Look at that, like a magnet. Now, it doesn't really go far. You can see we've got a green QMP dot here. Let's just keep on tracking. Standard MACD's in buy mode. We've got a green confirmed cross of the fast MACD, which is, and we've closed above the 25 SMA, take the buy trade. There's some interest in this one. I didn't have a look at these charts before I started, so now look how it hugs, the fast MACD hugs the zero level there. It doesn't cross it. It may have crossed mid-candle or something like that, but it hasn't. The standard MACD, even though it's in buy mode, it's fairly flat. Goes up. We get a red dot up here on the QMP. We're still in this trade though. It's still above. So, you know, depending on how you managed it, you might have kept your stop below the 240 LMA. And here we have a sell. We've got the fast MACD is confirming the sell. The standard MACD is not quite in sell mode yet, but it's definitely heading down. Got to close below the 25 SMA. We've already got a red dot. You take the sell. Write it down. We get down to here. We've got a cross on the two MACDs that are over superimposed on each other. Might be time to take some action. Goes hand in hand with the green QMP. Might move your stop. Let's keep on going. Right, we've got a confirmed cross of the fast MACD here. We're in buy mode on the standard MACD. What have we got up here? We've already got a green QMP dot way back here. And we're not above the 25 SMA. The MAs are very close to each other, but there's enough criteria already. We don't need it. Remember, we only need 2 out of the 3 as long as we've got this confirmed cross. And up she goes. That's a nice one, that one. All the way up. You can see too, look at this. This is just something for your information. See, we've got a divergence. See, we've got price. There's a high there. There's another high. High on price. High on price. Have a look at the fast MACD. We've got a high, followed by a lower high, followed by a lower high. That's when you start jamming your stop up. You know that's going to roll over eventually. So you can use these nice little fractals on the way up there. Then we're going to sell mode, buy mode, sell mode. You get the idea. So that's on the. Look, it's not. This is a good chart. The gold, and it can be like here. Just the most recent one. We possibly could have taken a buy in here somewhere and out down here. So we would have taken a loss roughly of 193 pips, say 200 pips. But there's your new sell there. Meets all the criteria except for the standard MACD, but it's still valid. And that's gone down nearly 400 pips and still going down. It's down 600 pips. It has got its advantages and disadvantages. It's a purely mechanical system, as you can see, for entry. You will have to use some discretion, some smarts when it comes to managing trades. And also, it may get you into trades a bit later than, say, my high probability setup, but it will keep you in trends longer. See, if I was in a high probability and I took a sell in this area, if I did, I'd probably be out by now. Same with, if I was in a buy, I may have got out earlier, whereas this will keep me in a lot longer. Sometimes, not all the time, but. All right, now let's just go down and have a look at a lower time frame. So I'll go to the pound yen, which is one of my favourite pairs if I do day trade or trade on the lower time frame. This setup is a 15-minute chart. It's the exact same setup. Templates don't change. The only difference is on the indicators here. I've got the Paramount work time. You get that with the book as a part of the download package. Or if you don't have it, you can get it at on my Facebook group. Or if you're not a member of that, I can show you. Where is it? Just send me an email. I can't remember my email address. At jagfx.com. Just send me an email to that address there, admin@jagfx.com, and request, which puts arrows in the chart. Yeah, just request it and I'll get it to you. Back to the chart. All right, iParamount work time works on your MT4 platforms times. So you have to work out, say, when London's open compared to your platform, etc., if that's what you want to base it on. Normally I set it up, for me, I set it up on my platform from 8 till 8, so it's 12 hours. That for me is about just before London Open to about just after New York lunch. So that's the times I would be trading, which suits me in my local time zone, living in Asia. So with this, the dark grey area, like this grey area, is that time. So ignore the light background and look at the darker grey. That's the time. Now, with trading on the lower time frames, this is a 15-minute chart using this method. Look, it's not something I'll be that keen to do. I could do it. I've got better methods, so I could trade on the lower time frame. But what I'd suggest is you trade with the 240 LMA on this time frame. So, for example, here's at the start of the session here. There's your buy signal right at the start of the session. You're going into the 240 LMA. So that to me, even though look, it's a great trade, I'd be reluctant to take that. I'd be looking for off the 240 LMA. Even up here, you're going into it again. So not ideal. But there's nothing to stop you taking those trades. Let's see if I can find something. Should have actually prepared chart, shouldn't I? And you got to move. Remember too, 15-minute chart, things move quickly. So see here, there's no trades in this session here. Look, it's already, the buy was back here somewhere during the Asian session, and it stayed in buy mode all the way up till the very end of the session. And this one here against the 240 LMA, but it's a good setup. See if I can find one. Here we go, here's one with it. So that's that. 16th of July. It's the same one. So here's your criteria is all met, except for the standard MACD, but it doesn't matter because the fast MACD's crossed the zero level and you're above the 25 SMA and you've got a green QMP. So take the buy there, and that's nearly 40 pips. You could trade it to the downside if you want. I tend not to trade against the 240 LMA, but bang, down to it, no worries. So it does get a bit messy. It looks messy on here, but always look at this part here. You might get chopped around a bit, but eventually you'll catch a trade. If you so you sell there, trading right into the 240 LMA, which will be tough. Trading away from it there, you probably get stopped out, lose a few. If you took this trade, if you decide, again, you're trading right into the 240, but it breaks through. It's just, here's another one. You trade, take it, you're out, and you could sell it there and make up. So you can get on lower time frames. It's not my thing, as you all know, but it's doable. But just be a bit more selective in your trades and just don't take every signal based on the fast MACD. Now I might just have a quick look at another chart. So we'll go new chart. Let's have a look at the USD Japanese yen. We'll have a look at a 4 hour. MACD hopper. Right, here's a 4 hour chart. Just compress it a bit. You can see, look, there's plenty of signals, but it can get ugly if it's going sideways. Even on the 4 hour, it might pay just to take trades with the 240 LMA. So if you took the sell, you can see here there's a definite gap. The trend's going up, price is above the 240 LMA. There's a sell there, and it hardly went anywhere at all. Take the buy though, you could stay in that and just, I would be out of that. I would have taken a loss in that buy. Take the next buy. You probably got a few pips there because you went up to a previous high, so you could have taken some pips off the table, and then you get out of it. So I'd say that'd be an overall type break-even sort of trade. And you got to remember, I'm looking at trades here. I can see exactly what's happening to the right, so I've got that bias built in without, I can see exactly what's happening. So here's the next buy, and if you just stayed in this, look at that, that's going up, and your sell signal is here. You wouldn't take it because it's against the 240 LMA. Take the next buy, and up it goes again. And there's your divergence. See the divergence across the low highs there? Time to jam it up. So, you can, there's ways of doing it. It's like on the high probability method where you trade with the trend and that. Same on this one. Look which way the 240's going. Look at that. It's going down the big downtrend. I know it's hindsight. Take the sells. Take the sells. Take the sells. Just take the sells. Ignore the buys. Or if you do want to take the buys, because I know most people, the majority of traders counter trend trade. I don't know why. I do it myself. If you're going to take, say, example, you're just taking sell trades or with the trend trades, risk 2% on them. If you're taking against the trend trade, risk 1% on them. You're still in the trade, reducing your risk, but it makes more sense to go with a flowing river than swim against it, as some people say. You can see, look down here, look at this. It's, the 25 SMA is below, gently sloping down 240 LMA. Take the sells, take the sells, take the sell, take the sell. I know I'm repeating myself, but you get the idea. Nothing to stop you taking the buys. Look at there's some nice buys there. Well, I'm looking from the QMP dots, but breaking basically they're always around the 25 SMA. You will get some, but you're making hard work of it. On the daily charts, I'll trade both directions because you've got more time to make decisions. It's quicker, not quicker. It's slower. You've got plenty of time to make decisions. You can have a think about things. Whereas as soon as you get on these 15-minute charts or 1-hour charts, you tend to be rushed, etc. So to me, the daily charts are a pretty good setup. Let's just have one. I'm not sure how long this video is going. I don't want to drag it out too long. All right, let's have a look at, what are we on? We're in the gold. Let's have a look at the Aussie. This one was causing me a bit of grief last few days. I think I made note of this. Look at this. I'll just expand it a bit. Go there. Look at 4 dots, which means 4 crosses. So close there. I'm still in the sell here. 4 dots that are just really close. Now, I've got concerns about the USD, as you've heard me raving on about. But look how tight they are. I've just zoomed out a bit so you can see it. Now, if we go back in time, we're looking for 4 dots that close back in time. And I mean 4 dots, really close. 3, and 1 over here, so it's not close like that one. There's some close ones there, but they're not sitting on top of each other like the other one. So this just shows you how much the market changes. Look at this. We're going back in 2014, and we still haven't. Here's probably 4, but they're still not close not like those ones. We'll go back and I'll show you. So keep that in the memory bank. 4 dots. Looking for 4 dots, which means 4 crosses. Another 3. So it's close to being 4 there, but still not tight. Here we go. It's tight. This is, we're back. February 2011. Over 7 years ago. Now we go back to what we're looking at today. Look at that. 4 of them sitting on top of each other. It just shows you how markets change and what you've got to be aware of. But even though it looks messy there, just expand it a bit. Have a look at what's happening with the standard MACD. So it's in buy mode. You've got the dots crossing on the fast MACD, which just gets you in and out of trades quickly. We've got a green QMP there, so we'd only be looking for buys. And I think I've got stopped out in a couple. And I'm now in a sell because I've got the red QMP. So Even though it looks ugly there, you can. It's still not. You're not going buy, sell sort of thing. So you're following the other filters, I guess you can say. Right. So that's about it, guys. So that's from the basics book, as most of you already know. That's that one, Forex Trading. The basics explained in simple terms. If you've got the high probability book, you can put this system together with the indicators you've already got, so it's no big deal. And like all of my methods and systems I talk about, take them, make them your own. Don't just take my word that everything works. Experiment, have a look, come up with maybe different trade management ideas. Don't be afraid to take profit. At that Simply combo I talked about before, Jennifer, she's got that system, that combo system is actually very similar to the Mod MACD. She uses standard MACD. And on the 4-hour charts, I'll probably mention this in the book itself, she actually just takes on 30 pips on most of her trades. That's a profit target, 30 pips on every 4-hour trade. It might run for 200 pips, who cares? She takes 30 pips. It's a safe, low risk, high probability type setup. 30 pips on the 4-hour chart, 30 pips. So, you don't have to have the old risk reward ratio where you hear all the gurus saying, you have to have a 2 to 1, you won't be profitable if you don't. That's a load of hogwash. As long as you are winning more than you're losing. The problem is with the risk reward, people get it set in their mind that they've got a 50 pip stop, they have to get 100 pips out of a trade. Some trades won't give you 100 pips. Just take what the chart gives you, the trade gives you. Even if it gives you 20 pips and you had a 50 pip stop, it's still a winner. Who cares? Move on to the next trade. There's plenty of them coming along. You might have a 50 pip stop. Next trade you might get 300 pips. That's the way it is. It all works out in the wash. Don't be brainwashed by this risk to reward unless you've got a very specific system that works on that. Then to me it's just a bit of a myth. Alright guys, I probably rabbited on way too much. So that's the Mod MACD method. Any questions, get in touch with me at JagFX, admin@jagfx.com, or get on the Facebook group. Everyone's more than welcome to join, or I'm in Telegram, and you can contact me through my website at jagfx.com. Alright, thanks for that. Cheers.